How safe is your money in a money market fund? Let me repeat. How safe is your money in a money market fund? Well, that is exactly what I'm going to address on this based on what is happening. You guys, you're asking me this because, Joseph, please, how safe is my money? I'm outside the country. How safe is it? Then guess what? The next 15 minutes, I'm going to share with you extensively what happens. Well, today's of a different attire. By the way, good Joseph match available. Good Joseph, good Joseph. If you want to hit me, you can actually holler me. And by the way, don't forget, I'm going to pin a link on the comment section. That is link. By the way, if you didn't know, I've been voted or I've been nominated to speak as the financial coach of the year. If you would like to vote me, and by the way, this month, October 19th, is the gala days when the sherehe or the party will be held. So vote me in before we actually go to that particular day. That link is up there. You can go click it and get yourself into the point. Okay. If you're watching me for the first time, go ahead and hit that like button. Make sure that you subscribe and you turn that notification bell. Why? Guess what? I post these kind of videos each and every day, so you never miss any. Let's get into the business now. How safe is your money in a money market fund? That's a question that I get to be asked. Number one, let's first of all find out what is a money market fund. What does it do? Because most of you guys do not understand what is going on. Okay, so money market fund, obviously, it's an investment method that is offered by, in Kenya right now as we speak, we have like 25 companies that offer that. Well, as I'm making this video on 2024 of September, around there. Okay, now, or rather, October, so to speak. Now, the point is, money market fund, basically what they do, they collect funds from different individuals, and once they have that collected funds in a pool of it, then they invest it in a safer areas. But what makes it a safer area to invest, and why is it regarded as a low risk investment? First of all, let's start by to look at something called, there's something called regulation oversight. What does it mean? Anything on anywhere you invest, there must be a regulation. For example, in Kenya, if you want to be treated by a doctor, all the doctors are regulated by, I think the body is called Kenya Medical or whatever association. If you want to know somebody whether they are registered in laboratory issues in Kenya, they are regulated by KLMNTTB or something. If you want to know somebody is actually credited to do the pharmacy thing. We have different bodies that regulate each and everything. Are we together? So the same case applies to any company that is giving or is purporting to give a money market fund. Are they regulated? In Kenya, the body that regulates all the money market funds in Kenya, it's called CMA. It means Capital Market Authority of Kenya. Is to ensure you, who you're investing your money is safe, and also it's making something for you at the end of the day. All right, to make sure that you and the investor or the fund manager are actually regulated. Now, these companies are the one that regulates that, or rather, this particular body is the one that regulates this. So, if you want to know whether your company is, legit, as the Kenyans say, make sure that is regulated by the Capital Market Authority of Kenya. So, how does that make that money market fund safer? One is that the regulation, the oversight, the mandate, the requirement by the CMA is that that company that is giving you money market fund, they must invest in these areas. And now thus we go to the next point to explain why regulation it offers security and safe for your money. I have to explain the second point. There is something called investment portfolio. This money that you invest in a money market fund is invested in diversified areas. What does it mean in a simple language? They are invested, or this money is invested in different areas. One area, of course, I won't deal into this much, but I'm just going to mention, because I've been saying this like a million times. They invest in treasury bills, they invest in commercial paper, which is floated or given by corporate or corporations. And the last thing, or where they invest, is usually called the FDS, or the fixed deposit. So this CMA ensures that this company, let's call this company X, which is giving money market fund, the company ensures, the CMA ensures the company X meets the standard, or they invest in these particular areas. So if you hear that a money market fund, or so-called quote unquote a company that is saying they offer money market fund and they're investing in, I don't know, a commodity, I don't know, precious metal, I don't know, whatever, those kind of things, stocks, that is not a money market fund. That's a whole of a different thing. So this regulation is very much important. They ensure that these companies invest in this particular area. And also, by virtue of them diversifying or putting this money into different secured areas, ensures the safety for your money. Because if you look at the structure of the bills, These are government securities. They are structured well and they are very, very much stable. 2, FDS, fixed deposit. Okay, this is another area where it's actually stable and where investment of your cash is actually, or rather the safety of your money is actually ensured. Or should I call it the capital preservation? And then the last thing, and this part is actually the corporate paper. Only stable companies, those stables that have the regulations, those companies that they have the reputations are the one that can give that commercial paper. All right. Now we go to the next point, liquidity. Then how does the liquidity ensure the safety for your money? You wouldn't love to put your money where accessibility of it becomes a bit of a headache. You would love to put your money where the accessibility of your money, you can get it at any given moment. Are we together? So by law, the companies that offering money market fund, they have to prove something called the liquidity requirements or the capital requirements. They have to prove that because they don't want to prove or they don't want to show something called the financial stress or liquidity stress. For example, we have a lot of people asking their money back, and then you are there, you're giving delays of a week, 2 weeks, people haven't got their money. So by law, money market fund, you're supposed to get your money within 2 to 4 days. You have your money, all right? So they have to show that they have the liquidity money, that liquidity requirements or the capital requirements. Are we together? So if you're in a money market fund, when you try to withdraw your money, it is taking you 2 weeks, explanations and whatever, that should be function as a red flag. Probably where they're investing that money, they aren't able to access that money within at any given moment. Are we together? So you must make sure that at least you understand that money market fund gives you that thing called the liquidity. All right, because by the way, I don't know whether you know this, money market fund is that area where you keep what we call the emergency fund. And of course, what we know about the emergency fund is that you ought to keep it in somewhere whereby you can access it at any given moment, because this is an emergency. Emergencies don't wait. Emergencies, you need to get your money almost within a snap of your finger. You have your money. So of course you don't want to put your money somewhere, I don't know, you have to sell what for you to get back your money. No, you don't do that. So liquidity, that virtue or that part of it being liquid, actually it's a safe for your money because you can be able to withdraw your money at any given time. The other thing that ensures the safety of your money, or how safe is your money in a money market fund, is the structure of a money market fund. By law, and as of now, 2024 October, they are supposed to have a trustee and a custodian. Let's say company X must have a custodian and company X must have a what? A trustee. What does it mean? What happens is that, let's say this is the money market fund called X. They have a custodian, for example. You may find that the custodian of company X is Y Bank. Are we together? And the trustee of the company X is X Bank. So you find like two banks. They're like two banks. One functions and these banks, they're actually competitors. So you find one bank is the trustee and other one is custodian. What does it mean? For example, if you allow me to use this name, is a very simple one. If you put, if that's the point, if you send that money to that company X for the purposes of investment, that money goes to the custodian who keeps the money. Does not keep, this company X does not actually keep that money. It goes to the custodian who ensures that the asset that is being sent to this company X is kept to the custodian. So if the company X, the fund managers and what have you, the professionals here, of which we're gonna check out on the later points, you find like before they withdraw that money from the custodian, for them to invest to the requirements or the required areas, the trustee must ensure indeed that money has been directed towards the investment in those particular 3 areas. So when you're investing or when you're actually going to pick a money market fund company to invest, ensure to understand who are their trustee and who are their custodian. And if you go to the official website, you find that they have not elaborated this, who are their custodian and what have you. Then again, that should function as a red flag. Are we together? And of course, I usually suggest that the custodian and the trustee should be at least separate entities. Don't tell me that one company is functioning as the trustee and the same company is functioning as the custodian. That has some issues, has some things to be verified and what have you, okay? So preferably, I would say let them be 2 separate entities which do not have any mutual interest among them. Are we together? Now, we go to the next one, okay? The next one is where they invest. Okay, well, of course, I know they invest in these particular areas, but here I'm referring the period of time. They aren't supposed to exceed at least 1.8 years. They are not supposed to exceed that particular thing, okay? So they pick an investment, whether it's a bill, should not go beyond that. And of course, in PE bills in Kenya, don't go beyond 1 year, of course. The FDS shouldn't exceed that period of time. The commercial people, again, shouldn't exceed that particular period of time. So it is good to ensure that your company or your fund manager is investing in an area where it's not exceeding. Probably you may not be able to know this, unless you go to the offices, ask them, you would like to know. And by the way, if it is possible, and of which I recommend, if you're in a position to ask them, how much are you managing? For example, it's good to know, my company X, it has 80 billion, 15 billion, 10 billion, 1 billion that people has given. So of course, when you realize that most people are giving this particular company their assets or their money or their finances to manage, of course, it means that, of course, they must have win a trust. Of course, they have a good reputation. Their ratings are high. It's like when you want to buy something in, say, whatever the online platform you want to buy, and you want to import them back to Kenya. Of course, you go to the B2B. If it's a B2B, you go to the seller who has high ratings and, of course, a lot of reviews and what have you. That's the kind of a company that you go to, or that's kind of an individual that you go to. So the same case applies to a money market fund. You go to the one that a lot of people have actually insured or entrusted that particular company, and more resources and funds have been sent to that particular company for the purposes of investing or managing that particular asset. Okay, so even so, that 1.8 years capping ensures the safety for your money. Okay, we go to the other one, separation of funds or the assets. There is a clear, distinct separation between the money market assets or funds from the fund manager's assets. This is because they, okay, let me explain this. You may have a single company. Let's say the company is called X. Inside of this company has different things that they invest on. Okay, we have MMF, we have equity fund, we have bond fund, we have other things that they invest on and what have you. Okay, so you wouldn't love to go into a money market fund where there is not that clear, distinct and separation. They have to ensure, because for example, you also need to go, for example, let's say you are a Muslim, you need to go to the one that adheres to the Sharia laws. Okay, of course, they don't want to do something that is against your religion and beliefs and what have you. So of course, there must be that clear distinction between that money that is meant for the MMF and that money that is meant for a different thing and something of sort. Okay, now that is exactly what you're supposed to understand as far as that is concerned. Okay, but anyway, if you have any question, you can always post it on the comment section. I'll be able to respond, if not all of them, but I'll try the best I can to make sure that I'll be able to respond to that particular thing. And maybe in one way or the other, you would love maybe to get a hold of me or contact me. You always ask me, where is the description, where is your number? Let me just type it here. You can pause the video, zoom in, and then you can be able to read that number, because most of you have been asking me, hey Joseph, I would like to get that booklet, I would like to call you. But of course, I do charge for my services when you call me. Be informed before you do that. But the good thing is quite affordable, just a cup of coffee's price. My booklet on MMF is only 280 bob. So you can pick that digit, shoot me a call, and then we can proceed from there. Okay, now let's go to the next point. Okay, now the other one is the professional management. Of course, this money market fund ought to be regulated by professionals, okay? People who understand the financial markets very well, or the capital markets very well. They know where they're investing. Why are they investing this particular bill? Why have they gone for that particular commercial paper? Why are they going for that fixed deposit? How can they manage this particular thing? How is the performance of the economy in that given country? What are they advising their people who have invested with them? Do they have better option as coming up? You get the thing. Even if you'd like to get your money, say, from the money market fund to a different package, which maybe they have, then they should give you a good explanation and a good track record to show you that indeed where you are putting your money, it's actually safer and your capital preservation is ensured. So these money market funds are managed by professionals, okay? People who have been in this industry for quite a long time. Okay, but of course, you might find some professionals, of course, they are professionals, but they are greed. They are going to invest their money in quite risky areas, and they are not even doing what we call, a risk analysis, the feasibility study, and what have you. So you find like we are in a stalemate. My money is not there. Your company is actually bad reputation. So, and all those kind of things. Okay, whenever you are investing, it's always good to make sure that at least you understand all those factors. And by the time I'm finishing this video, I'm going to share with you a very important point at the end. The last one is the Kenya's MMF track record, the stability. Kenyan MMF, they have been known for being stable. We haven't had any kind of funny cases and what have you, defaulting and what have you. It has been all good throughout the time. So that track record also ensures that indeed that your money is particularly safe as far as that investment is concerned. Now, what is this important thing I want to share with you? Okay. Every time you're investing, please don't invest your dear money. All your money and everything you have diversified. Please be diversified. If you have money market fund, try rates, try index fund, try stocks, try bills, try bonds, try businesses, try real estate if in a capacity to. So diversify. Don't take all your dear money. In Kenya we say mbele na nyuma, meaning this is the only money that you have. You put it out there, things go south, then you are done. So you shouldn't do that. And I believe all that structure presentation, it's mirrored in different countries. Okay, maybe your country is a little bit different, because I understand I have international viewers from my for my channel. Go check out, if maybe it may not be capital market, it may be a different thing, but at the end of the day they assume the same thing. Are we together? It's good to just get the concept. Well, yeah, sure, that is it. I just tried to make sure that at least I share that information with you, because you've been asking me. Yeah, bearing in mind of what has been happening here and there. Anyway, I hope I've made that point clearly, and for now it's a goodbye, and see you in the next one.